There's been a big push these days for high income earners to reach FIRE status, which stands for Financial Independence Retire Early. With a huge increase in the burnout rate, can you blame them? But some people don't like the idea of retiring early and not being able to live it up with traveling and enjoying the finer things in life. Enter Fat Fire. This is where you can have your cake and eat it too, which is exactly what we're going to discuss in this video. If you're new to my channel, I'm Dr. Jeff Anzalone, a periodontist on a mission to help you escape the rat race and achieve financial freedom with passive income. My team and I put together a guide to help you get started on this journey, and it's available with the link below this video. So let's start off by defining what exactly is the FIRE movement. So what is FIRE? FIRE, like I mentioned earlier, stands for Financial Independence Retire Early. This is an idea that if the average person can save up to 25 times their annual living expenses, then you could probably live off that amount of money for 30 years using the 4% rule, which leads us to the next question, and that is, what is the 4% rule? Well, this particular rule was developed in 1988 from a research paper, also known as the Trinity Study, and it looked at the portfolio success rate for different withdrawal rates, and one of the results had to do with a 4% withdrawal rate, and it actually became famous. It was shown that a 4% withdrawal rate adjusted yearly for inflation via a portfolio of stocks and bonds only failed to last 30 years in two of the starting years it was analyzed. That was in 1965 and 1966. So the withdrawal rate worked 95% of the time. So for example, if you want to spend $200,000 a year, the math on that is you take the $200,000, you divide it by 4%, and that gives you 5 million bucks. Another way to calculate this is that you need 25 times your annual spending rate, which again gives you the 5 million bucks. Now, you're thought to be financially independent once you've saved up this 25 times your current annual spending. This number is also called your FIRE number, which is the amount of the invested assets you need to live off of for investment income to reach early retirement. So to me, the idea of achieving financial independence is where I have enough passive income streams to never have to work again. This is also known as infinity investing. I'm not having to rely on my dental income to cover our discretionary spending. As a side note, I recently spoke to two dentists about money. One had been practicing for about 2 years and the other for about 5 years. Their mindset was like mine when I got out of dental school, in that we're taught only to focus on growing active income, which for us is dental income. And active income, as you may or may not know, is the highest taxed income there is. And we were taught this, just focus on growing the active income and work basically until the financial advisors tell us that we've accumulated enough money. I don't know about you, but this is probably one of the options that you've heard as well. I guess they weren't too familiar with the cash flow quadrant, right? So look, there's more than one way to skin a cat. So don't think that the only option that you have out there is to work for 35 or 40 years or until you physically can't do it anymore. There's plenty of other options out there for you. So now let's get into what exactly is Fat Fire. The Fat Fire approach is being able to, quote, live large in retirement without having to sacrifice your spending. Now, the average American household spends about $60,000 per year, which puts those pursuing something called lean FIRE or minimalism living on half of that. Now, for our purposes in this video, the Fat Fire number would be roughly double the average spend, or it would be around $100,000 to $120,000 annually. If you want the ability to spend $100,000, then according to the calculations, you need a retirement savings 25 times that, or $2.5 million. I came up with something called real estate Fat Fire. I actually looked at it online, looked it up online, couldn't find it. So, hey, maybe I've created a new term. You never know. So if you've invested like me in real estate syndications, and let's say that you're doing that and sort of the average preferred return that it's paying, which is the amount that it's paying per year in quarterly distributions. So if you invested in syndications paying an average of 7% a year, then you would need much less than what most financial advisors tell you to live on. So according to the calculation, if you want to live on roughly about $105,000 a year, you would only need about $1.5 million. So 7% of $1.5 million gives you that. Now up here, $2.5 million, that's $1 million difference. That's a big difference. And once you start doing the calculations, then you'll understand just how powerful this is. Now, when you start investing in syndications, not only do you get the great tax benefits, you get the depreciation that helps offset this passive income that you're getting, but you also get quarterly distributions, which is the cash flow from the rental income plus the continued appreciation of the property. The property keeps going up in value. Now, when you're only invested in the stock market, you're depending on, whenever you take that money out, whether the markets are up or down, along with you're constantly drawing down from your account. Plus, guess what? Each time you take money out, you've got to sell a stock or mutual fund or something like that, which causes you to pay a capital gains tax as well. So you're constantly worried about running out of money versus investing in real estate. You're not always worried about running out of money. Now, once I made this switch several years ago, I realized I didn't need anywhere near what I've been led to believe to retirement. So if you wanted $5 million, you don't need anywhere near that. All right. So let's talk about what can Fat Fire do for you. Now, there's nothing better than the thought of being able to continue the lifestyle that you're used to well into retirement. Who wants to work their whole life, scrimp, save, and invest, and then get to the point where we do retire and then we'd have to always worry about running out of money? We have to clip coupons, never travel, never enjoy ourselves. I don't want that. I'm sure you don't want either. But with fat financial independence, you're able to have enough wealth to travel, stay at 5-star resorts, eat good food, and have the freedom to live wherever you want. Now, there's a few pros and cons of Fat Fire. The first pro is financial flexibility. Reaching Fat Fire provides a great amount of financial flexibility due to the larger investment portfolio that you're going to need. So this flexibility allows for a lower risk of losing your financial independent status and actually having to go back to work again. And it also allows for an increased hedge against market fluctuations and the ability to decrease your safe withdrawal rate if the market tanks, which again, that's why I love real estate. Second pro is optional frugal lifestyle. To save money and reach FI, it takes discipline and some sort of degree of frugality. But once you reach this Fat Fire status, then continuing to live a frugal lifestyle, it's optional. As you've got your saved wealth that you have, it can cover your standard of living, or if you want to increase your standard of living, you can do that as well. Couple of cons. Number one is lifestyle inflation. For most people, the more we make, the more we spend, right? Reaching Fat Fire status allows you to, again, enjoy a higher standard of living, which could unintentionally create a new normal spending level. Now, if left unchecked, this can lead to lifestyle inflation, rapidly eating away at your portfolio. Now, even though you have more than enough to live on with Fat Fire status, it's still important to make sure that you're following some sort of safe withdrawal strategy. And then the last con is, as you can imagine, it's just going to take longer to achieve. Most of our members of our passive investor circle are high income professionals, physicians, dentists, engineers, pharmacists, etc., attorneys. And for them, it's much easier reaching Fat Fire status because they have a higher income versus somebody with just an average income. Even when accounting for compound interest, achieving Fat Fire can actually add a few more years of having to work. Just depends on your situation. And with the members of my passive investor circle, like I mentioned, they're high income professionals and they're able to invest alongside of me. Most of these investments, like I mentioned before, the real estate syndications, they're only allowed for accredited investors. And you may or may not know what an accredited investor is, and you may not understand what it means to do that and what some of the investments you have access for, which is why I've actually put a video together. You can check it out over here, which is why you should become an accredited investor and why it matters to you. I'll see you in the video.